everybody, Brian here from quantlabs.net. Today I'm going to talk about the momentum versus mean reversion or pair trading for both crypto and forex. So as it stands right now, I've done a webinar here you can get on my YouTube channel, Quantlabs, videos called 4-Day Track Record Cryptocurrency Trade. That will demonstrate the latest in the cryptocurrency strategy bot that I'm running right now. Been running it since last Thursday. Been getting on average or at least 50% winning trades, which is good. This webinar will go through the whole process. I've also been trying to experiment, trying to get mean reversion / pair trading working with cryptocurrency. I've tried different periods or time frames. I've used all the way down to a minute, hourly, daily. One thing I can say about crypto and mean reverting, I'm sure that there are fixed set of crypto pairs that can work with mean reverting, but I'm kind of doing it quite differently. So the way I'm doing it, I'm just not able to find very consistent pairs that hold for over, let's say, a few days, a couple of weeks even, due to the wild volatility of crypto. So I've kind of given up on that path. Probably, I won't say forever, but I see no reason in pursuing it any much further. Now, that's crypto. So no to mean reversion, but yes to momentum. Now, when it comes to forex, it's a different story. I have been testing momentum for a couple of weeks. Now, I do see opportunity there where the logic that I've transformed from crypto into forex, it seems to work, but those opportunities are very rare. I've been waiting almost 2 weeks now and have not gotten the momentum strategy working for forex. So right now I'm not going to pursue it. But now when it comes to mean reverting or pair trading on forex, that's a different story. So I'm going to show you that now. This seems to work. I've been testing different time frames. Now what I'm doing is I'm using right now optimally, from what I see, daily data. So hopefully you've seen this spreadsheet I've gone on and on about, specifically using the p-value. So what we're looking for here are the strongest pairs against the weakest, and we combine them to find these combined p-values. So usually when you get a p-value of less than 0.05, you have a pair that co-integrates into the future for a length of time, depending upon your time frame. So in this case, we're close but no cigar at 0.056, with a long for New Zealand USD against Australian Japanese yen as a short. So we're not quite there yet, but when I do play with these, usually there is a opportunity, usually because these combinations hold for a length of time. Now, to really, in short, be able to say what time frame is best and the length of time frame of testing when you co-integrate for a proper p-value, I've been informed and have been guided to use at least a year. So when I'm using Oanda data, usually I'm using end-of-day data, daily data, where I can download up to 1,000 days worth. So I use that to get proper long and short. I could probably shorten it to get something a little more consistent, but I just want to show you the mechanics of it. So in this case, we have New Zealand USD, Australian, Japanese as a short, and again, New Zealand dollar against US dollar as a long. So out of that, we generate two charts. Now, this is for timing positions. So in here, we've gone and look at this. So, for instance, here, if you look at just focusing on the ones I just showed you, the Z score. I'm not going to get into that, but because you could easily look pair trading mean reversion on my blog or my YouTube channel to figure all that out. But usually, this is what we're dealing with the Z scores between 1 and -1, and you can see the spread between the two pairs of here, long New Zealand dollar against USD and the short Australian dollar against Japanese yen. You can see here, this is a classic mean reversion move. And that's what you're looking for to be able to see if there's a pattern here. Now here in the spreadsheet, which we just ran, because it's not less than 0.05, it's not mean reverting. So one of the things you also need to check for is the data stationary. So we do that as well. So let me just come in here and show you another chart that gets created here. So we have the Z score of the pair combos. On top of that, we have the moving average of the spread between the two, of the closing price, using daily data. So here, you can see here that we use a slow and moving ratio to determine the timing if there is any form of co-integration. Again, this is daily, I'm sorry. These two charts I just showed you, the Z score and the moving average, MA, we are using hourly data for that because we already know once we get a p-value of 0.05 or less, that the pair is co-integrated. We know that moving into the future. So that way you also use here, using this combination, the two charts that I showed you, the Z score, FX, and the MA or moving average FX, these two are using hourly data over 1,000. So we can get away with that because we already know it's co-integrated. So on an hourly basis, we are able to, even in a more timely basis, be able to determine short and long pair trading opportunities. So we do that, and there are other more detailed charts that we have that will determine if the pair are at that present time co-integrating and it's stationary data. Again, you can look up with keywords pair trading, mean reverting on either my blog or my YouTube channel for the details of that. But once we find something that's stationary, then it's pair trading. What we do is we schedule to run this process every 6 hours, and then we time the long and short positions based around those times. So that's what we're looking for. I just want to show you that. This will be part of my analytics service, so you can find these data these charts, as well as a spreadsheet or the coin integration FX XLS. I also include specific ones that are generated at that time. As you can see here, July 9th, 13:48:15. So that's hour, minute, second at the time that that's generated as well. And then we also have a stationary log that just basically logs during that whole time what's stationary and what's not. All right, so I just wanted to show you that and give you an idea of how this pair trading mean reversion will work on the forex only, not crypto, as explained earlier. On that, we shall talk to you later. Have a good day.